All right. I'm actually want to follow up on the previous talk and maybe give a little wider idea what you need to consider when planning an ICO. I'm not claiming to be an expert on all of the topics that I will address, but my role in those transactions is rather the structuring role. So I take the overall view and try to find out, what specialists we need to actually cover everything involved and to get them on board. So I want to start with citing from a publication of the Scientific Foresight Unit, which really, I believe, goes down to what blockchain is about and what sometimes seem to get lost when you take a look at a lot of newer projects. And that is that the technology as such always have values and politics. And the reason why traditional ledger systems position their creators as the central intermediaries are clear. Since all transactions pass through them, the creators maintain their position of power and capacity to profit from their users. I guess that's clear and known. And I had been surprised that back in 2017, the European Scientific Foresight Unit already recognized the following. Each case we use a distributed ledger, we participate in a shift of power from central authorities to non-hierarchical and peer-to-peer structures. That to say that blockchain's popularity is due to increasing social trends to prioritize transparency over anonymity, to diminishing trust in traditional financial and governance institutions, and to expect greater levels of accountability and responsibility in all aspects of our lives is only part of the story. Nevertheless, using blockchains instead of traditional ledgers actually invokes these very shifts in society. And I personally believe that should be at the core of each blockchain project. I will also dive a little bit deeper into the topic, what is decentralization actually about? Is it only the technology or is it even a little bit more than that? So overall structuring considerations. First of all, very important, take your time. We see a lot of projects that rush in a hurry towards an ICO. Since last summer, I always hear the ICO race will be over in 2 weeks, we must be done by then. So far, this didn't happen, and I actually don't see that happen in any near future. So take your time, because hurry will limit your options. As we just heard, there are certain license requirements, filing requirements, maybe prospectus requirements, and all of those will take time. If you're not going to take that time, you will have a very, very minor space left where to maneuver. And also, even more important than this pure legal and regulatory stuff is tax. Tax is actually currently causing more problems than the legal stuff. I think we're starting to see pretty clear on the legal side where we are and what needs to be done to be compliant. But the tax problems are not sorted out at all for the time being, at least not here in Germany, and maybe in some countries like Switzerland or Malta, where the authorities are very much willing to come to an agreement with you on a case-by-case basis, but that's not the case, at least here in Germany yet. So what options do you have? We already heard, I guess I missed that part of, where is he? Sebastian's talk, that we have basically, from the German or European perspective, we basically recognize 3 different types of tokens that are security tokens, which mean that you give a participation in the future earnings to some extent. You give a return in a monetary way back to the token holders. So that does only make sense for ventures which aim to make profit, right? A security token does not make any sense for non-profit undertakings which aim to establish, at least on the protocol layer, a freely accessible infrastructure. So that are my favorite projects, but for those, security tokens will not work. Then the valuation. We always, or not always, but often hear some dream figures of 100+% return on investments even per year. And that is actually very difficult to achieve. So question mark is always, are the return assumptions really justified? Or could they lead, if you market that too aggressively in the future, to some claims of your investors? And then obviously, you know, any startup wants to invest, first of all, with the funds they receive. So when is a startup actually able to deliver a return on a security? Further, the obligation to pay out or to let others participate in the returns will limit your options for future growth. Because once you become profitable, part of that profit cannot be reinvested, but needs to be delivered to your investors. So I'm, as you can tell by what I've said, I'm not a great fan of security tokens, because that's basically the old way of financing ventures put into, you know, a new digital framework. But nevertheless, you know, the well-known structures still apply here, and I think blockchain gives us the opportunity to structure business differently. So then we have the utility token, which is in contrast of the cryptocurrency, a means of creating bilateral relationships between the issuer and the token holder. So think about the typical case of vouchers, for example. The vouchers will only apply between the token holder and the token issuer. And that is in contrast to the cryptocurrencies, which are meant to be used between numerous third parties like Ether or Bitcoin, which really do not create a relationship between the token issuer and the token holder, but rather are aimed to create a means that is used between third parties on the blockchain. And I think, you know, the cryptocurrencies are the most interesting instrument that you could use, but from a tax perspective also the most difficult one. The utility token, in the sense that, you know, we legal people use that term, always require a central issuer or a central organization that actually promises you a service or product. So that token is usually attached to a centralized business and not really to a decentralized structure. Any questions? Yeah. So what are the cost drivers? Obviously, license requirements, prospectus requirements always come at certain costs. But first of all, the number of jurisdictions, and one of you addressed that already previously, that is driving the costs immediately, right? Because you basically, in any jurisdiction, you start at zero, analyzing what needs to be done and then fulfilling the requirements there. So my advice would really be, you know, limit yourself to certain jurisdictions in the beginning and start from there. And when the things become successful, then broaden your approach. It's simply impossible to go global right from the beginning. So the blacklisting that we have typically seen with ICOs in 2017 are really a dangerous thing to do. If you only exempt certain jurisdictions which are known to be dangerous, like the US, You might overlook Canada, which is similar, and other jurisdictions which have similar approaches. And I always like to say, if you want to keep your freedom to travel in the future, you should have understood your legal requirements wherever you sell your tokens before you do that, because otherwise you might end up not being free where to spend your next vacation in the future. Yeah, that's due to the fact that if you play in the financial regulatory area, you're not only dealing with any civil law liabilities you might have created, but also with personal fines up to jail, which can also jeopardize the whole business. So also from a business perspective, it doesn't make any sense to blindly do transactions where you're not familiar with the legal landscape. Yeah, and back to tax planning. I'm not a tax lawyer, so everything I'm saying now is just hearsay, right, out of the experience working on many cases. And you really need to get not only a lawyer, but also a tax advisor on board right from the beginning to really understand what you're doing in that area. I refer to the three categories of tokens. The security token is, from a tax perspective, fairly easy because it's common ground. It's basically only a digital representative for instruments that have been existed for many years. Similar to the vouchers and the security, the utility tokens. There you will basically have to deal with VAT, because obviously if you're selling a service or a product, this will come along with VAT obligations. So the question is to figure out where and when to pay that VAT. In case of a voucher which can be used for multiple purposes, I understand the obligation does not arise right away upon ICO, but when the utility token is finally used for its purpose. But it's not only the jurisdiction where the issuer is located that counts, but if it's an electronic service that you're offering for your voucher, you might be confronted with the fact that it's the VAT where your customer sits that is relevant. So that can make it a little bit more complex. That's at least the rule within the EU. So that needs to be understood and to be accounted for when you do your business plan for any utility token. Plus, the utility token in the form of a voucher typically comes along with an obligation that you put on the passive side of your balance sheet. And you need to plan in advance how many costs you will create over time so that you don't become technically over indebted from the balance sheet perspective. So that's something to manage as well. Then the most complicated thing currently from the tax perspective seems to be the cryptocurrency. Because what's happening? You're basically creating something out of nothing. So you're increasing the active side of your balance sheet, but the passive side of the balance sheet is not growing alike. So what does that mean? That immediately goes into profit, which is taxable. And the tax rates here in Germany are somewhere above 30%. So if you're doing an ICO at the end of your business year, having no chance to build up any costs against it, you will more or less immediately pay 30% of your ICO returns. And that's obviously something nobody really wants to achieve. So take that into account, discuss with your tax advisor, and think about a solution for that, which is, I think, not, there's no safe harbor idea, so to speak, as I understand yet, how to deal with that problem. Yeah, and obviously the problem with tax is that if you want to plan that properly, you need to do an inquiry before you start your business. And there is a 6-month period in Germany until which the tax authority is supposed to answer such an inquiry. So that is already quite a long period. I barely come across any project that is willing to wait 6 months until the answer from the tax authority is there. And then there is obviously also the risk that shortly prior to that 6 months period ending, the tax authority comes back with loads of questions, and by that automatically prolonging that 6 months period. So there is no certainty that you actually have the answer after 6 months. But if you don't do that, and unfortunately none of our clients did so far take that step to actually issue a formal tax inquiry, then most likely you will only find out your tax positions roughly after 3 or 4 years following your ICO, because that's the point in time when the tax authority comes and really checks in detail what had been happening. So you need to build up reserves for the risk that maybe some unexpected tax will hit you at that point in time. Yeah, that's unfortunately where we are on the tax front so far. Any questions?
One question. For example, if there is like a 10 ether and we are not converting them to cash, that one is also on the balance sheet or no?
Of a company, yes.
So yes, that actually when you count at the end of the year, you are calculating the price at the moment. What is in actually that is like including, or I don't know.
Well, it's an asset in your balance sheet, yes. Yeah. Unfortunately, it's not nothing. It is something, right? And it has a market value, especially if you take Ether or Bitcoin. And then, yeah, you've got to put that converted euro amount into your balance sheet. Maybe there are some options to say this is highly fluctuating and, you know, for precautionary reasons, acting as a reasonable businessman, you don't really take that precise amount at the end of the year. That's maybe something to discuss with your tax advisor if there are any options to, you know, reduce that a bit. But yeah, basically it will go into your balance sheet. Okay, decentralization. We saw a lot of ICOs in the recent past that were driven by centralized companies just using the blockchain technology, you know, for its business implementation, but basically having nothing to do with the idea of decentralization in the original core blockchain scene. That is okay. But I always feel, you know, you must be cautious that you don't do some kind of marketing or advertising which leads people to believe that this is actually a decentralized project. I would never call that a decentralized project if somebody is just leveraging the technology for some kind of application. The typical decentralized project will build a public infrastructure accessible basically to everyone. And it can nevertheless build a business model upon that by building a to be paid for application on that layer. So really, you must take a decision what you want to build. Do you want to be just like a regular entity running your own business and just, implementing some part of your business offering on the basis of a blockchain technology, or do you really want to build a decentralized structure? And that and that comes along also nearly automatically with the question whether you're creating something for profit or something non-profit. And most people obviously want to have some earning. So they would like to create something that is public infrastructure but that is typically, as such, not really creating any personal return for somebody. So what we see a lot is the combination of a non-profit entity which shall be inclusive to the community and to everyone involved, plus a typical for-profit entity that is instructed by the non-profit entity doing the ICO for implementing parts of the protocol. So that is one option how to combine it. And typically the for-profit company also takes over advisory roles for further participants joining the non-profit, rather inclusive organization to bring them on board and help them with the onboarding. So I always like to invite everyone to really take a look at what they are building, if there is an option to actually integrate at least partially this building of public infrastructure on the basis of a non-profit entity. That I think really is at the core of the blockchain idea, and that is also what, from a society perspective, is, you know, the true achievement of the blockchain technology. And those projects actually also do help in our talks with the regulators and the politicians to push that movement a little bit more forward. Unfortunately, they really concentrate on the big chunk of the cases that we had in the recent past, which had not been surround such public infrastructure building, but rather, you know, centralized entities just building their usual, you know, profit-oriented business upon the blockchain technology. And for that, it's actually really tough to convince the politicians to give us a little bit more freedom within the legal space. So I would really like to see more people think about their business models and try to figure out if there is a base layer which they could implement as freely usable public infrastructure instead of only creating a typical centralized company using the blockchain technology for some parts just for their own personal profits.
Do you have an example for that combination, non-profit and profit?
Yeah, I mean, look at Ethereum, for example. They did it in a similar way. The Ethereum Foundation is non-profit, but obviously the core coders within the Ethereum then got instructed by the Ethereum Foundation to develop certain parts of the codes, and they got paid for that, right? So that's like, you know, the front runner for that model. But also look at likes like the Energy Web Foundation, trying to build a non-for-profit entity with their Switzerland Foundation, combining all the players in the energy sector, and obviously all the big energy companies taking part in that idea. They always do it for profit reasons, right? But the base layer is again creating public infrastructure. Yeah, so we see a lot of those projects now kicking off, following like a long phase, maybe from summer last year until maybe Easter time this year. We basically saw only for-profit centralized projects, but now it's taking a little bit of kickback.
I agree. We see a lot of these combinations with the Swiss non-profit and maybe German operational entity or some another operational entity. But does the German non-profit law actually lend itself to this with the German foundation? Have there been any examples where this has been?
The only German example so far is IOTA. IOTA created a German foundation in the sense of a Stiftung. I will come to the options that the German law provides a little bit later, but maybe I can also say that unfortunately non-profit does not automatically mean, from a tax perspective, charitable, right? So to get into that tax charitable status, that's really difficult in Germany. We basically only have like there are about 20 categories, right? And you must fit into one of those boxes to become, from a tax perspective, charitable. And the only one that could at least fit a little bit is science and research. So what you then need to do is you actually need to build the whole non-profit entity around science and research. You cannot come up and say, hey, I'm building a public blockchain, and that wouldn't work. But you must say, you know, we are doing research in the area of decentralized organizations, and for research purposes, we intend to run, you know, this test blockchain. And then obviously you need to publish on a regular basis reports. You need to make events where you publicly present what you have built. Yeah, so we usually do not really advise to go for that specific tax status, but simply to stay in the non-profit area without that tax status, because it comes along with a lot of hassle.
Yeah, a follow-up question to that. Charity, do you mean eingetragene Verein in Germany?
No. Ich meine Gemeinnützigkeit.
Gemeinnützig.
Ja, die steuerliche Gemeinnützigkeit. Genau.
You could deduct.
Yeah, if you're charitable from a tax perspective, you don't have any tax on what is it? Ertragssteuer. What is it? Profit tax? Yeah. Yeah. So that would, you know, help in case of the issuance of a cryptocurrency, for example. Yeah.
And the Swiss entities, the Swiss non-profits, they do manage to actually be not taxed.
Yeah. As far as I know. Yeah. Yeah. In Switzerland, generally speaking, with the tax authorities and with the financial regulators, it's easier to talk on a case-by-case basis and to come to an agreement. In Switzerland, yes, that's my understanding. Yeah, and also obviously, you know, the foundations that are offered in certain jurisdictions tend to be more flexible than we know it from here. I understand that applies for Switzerland and Liechtenstein, and also the Netherlands also have a stifting, which seems to be fairly flexible.
Sorry, one question regarding the case you talked about Ethereum. So you said Ethereum Foundation is a non-profit. So what's the entity for the profit part?
Well, the developers typically have, you know, their GmbHs or limited liability companies under which they run their, you know, coding activities for which they are paid. It's just a regular instruction for services.
So but it doesn't belong to Ethereum?
No.
Okay, so you mean other like service providers like developers that are using Ethereum?
Yeah. You know, the Ethereum core coders typically have like their own enterprises. Yeah.
The technology developed for Ethereum itself is still under the foundation. It's still a non-profit.
Yeah, but they outsource it,
Okay.
right? They outsource it to their coder community on the basis of paid instructions.
So Vitalik is actually not the owner of another for-profit organization to develop technology for Ethereum Foundation. You cannot have both though.
Well, I don't want to exclude that. That depends upon the status of that foundation. You can have multiple roles, but obviously, at least from a German perspective, especially a charitable venture is giving instructions to somebody, it must be, you know, the pricing on this must be comparable to any third-party instruction you could give. You cannot just price, you know, moon prices on these things. Yeah.
It's possible to actually have one chairman person, for example, for both non-profit and profit, but
Yeah.
just based on market price, everything will be
Yeah. But you know, at least in Germany, you can be sure that the tax authorities will very much take a close look if the pricing had been set correctly. Yeah, in such cases.
Set up in Switzerland, for example, and then the development company is in Germany. Would that be some extra legal requirements for that, for the company?
Well, maybe that gives the option to also elaborate from my side a little bit more on the earlier discussion on which jurisdiction to choose. I always keep telling our clients they have to think about the implications of artificially moving their ventures into another jurisdiction. So first of all, you know, primarily you compare the tax rates in both countries, and typically that ends up with the result that you really must go abroad. Then you have to take into account that you need a location, right? You need to rent at least your mailbox over there. In a lot of cases, you need corporate service providers being local. And typically in the very tax favorable jurisdictions, those services are very cost intensive. Plus, from a tax perspective, if you nevertheless take all the decisions here in Germany, because you're living here, you end up with actually having moved for tax purposes your location back to Germany. Because when you found something abroad, you really must make sure that you take all main decisions at that place. So you start traveling back and forth. And when things become hectic and fast, you might skip that and say, well, I will get away with that. And then 3 years later, the tax authorities come and say, well, show me your flight ticket, show me your hotel booking, right? So it really costs a lot of management time and hassle for you personally to artificially move your ventures to another jurisdiction. That's always, what I like to stress. If you found the ideal jurisdiction from a legal and tax perspective, then you also must be willing to physically move there. Because otherwise, you can manage that, but it will become difficult over time because you always, you constantly need to observe those rules.
Actually, in Germany, it's also not so bad, right? The German Stiftung Foundation is harder to set up than GmbH. But GmbH can also be a charity.
Yeah, I'm coming to that later, to the comparison between the different options. Maybe it's even the next slide, I don't know. I just wanted to say, to maybe come back to decentralization, non-decentralization, how that links into the types of blockchains. I guess you are all very much familiar with that chart, trying to sort the types of blockchains according to who is validating the transactions and according to who can access the blockchain and do transactions on the blockchain. And those phrases, permission, permissionless, public, private, are much mixed when you read in the internet about that topic. But the way I like to see it, the permission, permissionless refers to the validation, and public, private is referring to the access. So the typical known, early blockchains, Bitcoin, Ethereum, are in that public permissionless field, while the typical enterprise thing is more in the permissioned private area. And what I personally think is very, very interesting is that permissioned public area on the top to the right-hand side, because that gives you the option to really structure from a legal perspective the governance around the blockchain. And it doesn't need to be a closed shop thing, but you can structure it a way that more or less everyone can participate in the validation, but subject to them accepting the governance rules. And one of the projects I'm also involved with is the IPDB, the Interplanetary Database. Who knows the Interplanetary Database? No one? It got silent. It is a project that was kicked off by BigchainDB. The idea is to form a German non-profit organization. For that project, we formed an eingetragener Verein. It has, from a tax perspective, the charitable character attached to it, and the idea is basically that only the members of that association are permitted to run the nodes, to validate the transactions. And by that link, the members automatically accept certain governance rules, the rules of that association. But it is meant to be, otherwise, from the access side, a public blockchain. So I really like that area, but maybe that's my legal focus, because in that area we can actually structure things a little bit more closely. All right, so what do you actually need to do to get your hands around this, decentralized structure topic, if you're not only doing a pure application on one of the known blockchains, but want to build your own? Well, basically, you take a look at your business model and try to sort your groups of stakeholders into, certain groups with similar interest. And typically, you will always find content providers to whatever platform you're trying to build. You will have certain content users, like the customers in most cases. And you will also have further service or infrastructure providers. And you need to, locate your own position in that whole field, and then try to figure out what you need to do to incentivize those different groups of stakeholders in your idea or your venture, and try to balance it. So that in the end you come to a meaningful flow of the token that you create, that not accumulates in the hands of basically one or the other groups, because then the whole system will in the end not work. So it's really important that you get your heads around, who is interested in what and who participates or contributes for what reasons. In order to get that balanced. And that also then leads to the question, what part of that governance structure for sorting those groups can we actually digitize, and what needs to be off-chain? That will also, in the end, lead to a decision about what kind of blockchain to use. In a lot of the cases we're currently working on, the thinking is that using the existing public permissionless blockchains will not work because they don't scale enough, and the costs for the transactions are not really foreseeable. They are going up and down. So a lot of projects going currently actually towards proof of authority, which might not sound that favorable immediately, but comes along actually with a couple of good features. Typically in any kind of platform idea, you will have some people with economic interest in that platform being created. Think about, the Energy Web Foundation. Obviously, all the energy providers have a certain interest in participating there and getting their personal offerings onto that platform. So there are certain parts of your stakeholder groups which you can actually identify and which you can approach and invite to work alongside with you. And those you could try to combine in the group of the validators in such a proof of authority network, for example. And if that group is not, a really closed shop, but if it's, inviting a large enough group to participate, then actually that could work pretty well. And that way you also have sorted out part of your governance problem because, as I said, those groups need to be sorted in some manner. Obviously, then you need to think about who's taking the decision of who is permitted to be part of that circle of validators in such proof of authority blockchain. That's obviously a very important role. And then the incentivization of the users or certain content providers to the blockchain could then be built about some kind of bounty schemes where they are rewarded some tokens for a specific behavior which you want to see on that blockchain, while those validator group would be incentivized by some mining-like reimbursement for providing the technical infrastructure to keep that blockchain running. Yeah, on-chain and off-chain governance, that's really very interesting. And obviously I concentrate on the off-chain part with those structures like the IPDB. Will be interesting to see how that further develops. Any questions? Okay. Yeah, some very interesting open questions, and I don't have any answers to those yet. But if thinking about the public permissionless blockchains from a legal perspective is really interesting, because the transactions are actually done between users of the blockchains. But nevertheless, the validators have a large say whether such transaction ever gets validated. And also in the question of whether there is a fork happening or not, that's also the validators who in the end decide about those things. So where does that come from? Where can we link that back into our legal system? Because it's a third party from the contracting party's perspective who is then taking a decision about the relationship between those two users. I don't really have yet an answer, how to argue that from a legal perspective, but I don't know. Sebastian, did you ever give that a thought?
Changing the concept as such of the transaction as such, so you can maybe just compare it to normal approval of such transaction, for example, in competition law, maybe just from the top of my head.
Yeah, might be, but that goes back to the question that had been raised by the Bitkom last year, right? The paper they issued, where a colleague actually argued that there might be a legal relationship between each of the miners and any user, which I think that's far away from any reality to believe that that those parties actually intended to close a contract with each other. So I think we need to find another legal argument for the reality that is happening out there. And also you can really discuss why should the validators have a say in this? Think about the DAO. So why should the miners really decide upon how to move on with the broken DAO? I always said, I had been in the creator channel back then in 2016. I always said, it must be the DAO token holders who have the last say in, what happens to their organization, whatever they formed. But obviously, from a technical perspective, that had not been possible. The last say with the miners. You might have you could have structured it in a way that you triggered maybe a voting of the DAO holders, and that's what I personally would have recommended, where they actually voice what they would like to see happening, and then it would have been nice if the miners would have followed that vote. But only, to discuss it with the miners, I always thought this is, from a legal perspective, very, very strange. Yeah, so that's really those are things which we cannot really base on our legal understanding yet. It's difficult to argue from a legal perspective what's happening there. So that's also a reason why I really like this public permissioned part, because in such a structure you actually can build a proper legally functioning governance. Yeah, and as I mentioned, that doesn't mean to be that this must be exclusive like the typical enterprise consortiums blockchains, but it can be built very inclusive and open, so that is very close content-wise to the permissionless blockchains. Also, it has a certain layer in between. Yeah, very important identity solutions. I look very much forward to getting actually, working in the live identity solutions, because those things will make it way easier to build a proper governance structure in basically any cases, and also actually to realize your business concept. Because think about VAT and such things, it's really tough to do serious business in an anonymized environment, because VAT requires you to actually send out an invoice. So how are you going to do that if you don't know who to approach? Yeah, we already touched a little bit on this. Maybe something I would like to mention. Proof of work and proof of stake have nothing to do with democracy, right? You always read about, the great democratic systems that are built, but actually both consensus mechanisms are plutocratic, right? So because democratic is one man, one vote. And it's not as many votes as much stake as you put into the system. That's actually a plutocratic system. So I would very much welcome the blockchain community to think a little bit further about this, because it has a lot of implications if we build a future environment and infrastructure purely upon plutocratic approaches. I'm not sure that that's actually where everyone wants to head to, especially not in the truly decentralized, freely publicly available infrastructure building. I don't believe that this should be built only upon plutocratic systems. And then again, the off-chain governance is basically happening in all those public permissionless blockchains through the main thought leaders like Vitalik for Ethereum, and then it is played across the social media. So the discussions are going on within social media, and sometimes I feel it's like the loudest voice that is heard, and that is then determining which way that blockchain moves you. And the corporate governance structures really give you, I think, a better system to balance interests and have a fair and open discussion about those topics. But that's just my personal opinion. Social media, I think it's a great thing to scale your discussions and get more people on board, but it's also a very fast opinion-making process. And we humans always tend to follow someone, right? So yeah, that's something maybe to think about. And I personally come into that topic because I wrote my PhD thesis about the separation of powers in democratic systems, and I find a lot of those discussions surrounding that topic again in governance structures and how actually blockchain systems work. Now here it is what you already asked for, like a slight comparison and overview between the typical entities that we would use in Germany for building decentralized systems. So first of all, the one that you will always hear mentioned in that context is the Stiftung. That foundation might be a non-profit or might be on a private benefit basis. What you basically create with a Stiftung is what we call a legal orphan, because there are no shareholders or anything alike. But it's rather something that is set on an autopilot. That autopilot, but also creates something that is very inflexible, right? Because it is difficult to amend the articles. So I personally always feel, especially in this area we are all working in, that is so quickly developing and moving forward, I think such an inflexible type of entity is not really best suited to serve the purpose that you're looking for. Plus, you cannot simply set up a foundation like this, but you need an approval by the foundation authority, and there's only one IOTA in Germany so far. I'm not sure how long it took them, but I believe it took them fairly long to get that permission to create that entity. And you've got an ongoing control by the foundation authority from forming on. You're under constant control by a public body, what you're doing with that foundation. That's why we typically rather end up with one of the other forms. And in the non-profit area, it's typically either a Verein. Unfortunately, there is no deviating legal translation for Verein compared to Stiftung. Both are called associations. So the Verein is typically used for non-profit purposes. It has a clear one-man, one-vote structure. You cannot buy into a Verein and hold like 50% of the voting rights. That's simply not possible. It's a nice vehicle if you start small. You need at least 7 people forming a Verein, and then maybe grow it over time. You can insert into the articles of that association a limit to prevent that organization being flooded, maybe not by the entities or participants that you would like to see in that entity. You can also set certain criteria, like eligibility criteria for members to become members. For example, in the IPDB, I think first instance we limited it to 100 members because we simply said, the onboarding will take some time, and there are not sufficient people here capable of actually managing huge masses to come into that association immediately. And the other thing is that within a Verein, the board members, which are elected upon formation, they have a vast freedom to maneuver. So different from private entities, there is no direct right for the members of an association to give instructions to the board. But the board can relatively freely act within the limits that are set in the articles of association. So that's a nice way to actually initially create what you intend to create, right? Because you have a certain idea in mind. And when you create something like that and do an ICO for that, you don't want to be overtaken by, you know, some other people having other interests. And if they bring enough members in, then maybe, you know, you're called off, or you get instructions that move the whole project into a different direction. And that is not that easy within a verein, due to the fact that there is no direct right to give instructions to the board. And then you need to set the initial term of the board members for a duration which allows you to actually realize the initial project. So maybe not just 1 year, but maybe rather 3 to 5 years. And then such a thing could actually work. Then you already mentioned it, somebody mentioned it, the GmbH. You've got a question?
Yeah, how are profits handled in the verein? Because as much as
It's non-profit.
it's non-profit, right?
No.
If you set up a verein for decentralized solution where revenues are created and in a way also should be distributed, is that in any way possible?
No, that's not what the verein is for. The verein is typically, there are, you know, rare cases of the so-called wirtschaftlicher Verein, but you know, the Verein is not the typical structure for any profit-generating effort. So this is really for non-profit purposes. There is no such thing like profit sharing with your members. Also, that's not what's part of that idea. Come to that a little later, because the entity you would use for such purposes is rather the cooperative, not the Verein. Das ist die Genossenschaft, genau. That's the last one on that slide. So if you want to keep even more control, you rather go for the GmbH instead of the Verein. Because the GmbH is still owned by its shareholders. We also like to call it foundation-like GmbHs. Because typically what happens is that you restrict the profit distribution to the shareholders, and you restrict the ability to amend the main purpose of that GmbH in the Articles of Association. And by that, you structure a GmbH which is in a way similar to a foundation in the meaning of the Stiftung. And if that is done in a proper manner, that GmbH may even bear the name foundation in its firm name, right? You could call it XYZ Foundation GmbH. And that's typically what the people are looking for in that space, that you can name yourself a foundation. The tricky thing is how to prevent actually the shareholders from running their ICO and then simply dissolving the GmbH and running away with the funds. So how to actually ensure that it has a true foundation-like character. And the one idea how to do that is to implement a so-called golden share. To give a golden share, just a very minor, for example, €1 share, to somebody that is trustworthy and is acting in the interest of the wider community, and then requiring in the Articles of Association that any amendment of the Articles of Association requires 100% of the votes. That's one idea we're currently discussing. And also discussing with the Bundesblock, the German Blockchain Association, if, for example, they could be the entity collecting those golden shares. Because we need to have, some third party which is not under the control or, anyway closely connected with the founder group. Yeah, and then the cooperative, that is actually the entity which you can use for profit purposes. The cooperative is meant for any venture that is acting like in the economic interest of its members. It's very interesting. It's a very like kind of outdated entity, but we actually have a lot of cooperatives in Germany. Think about the whole Raiffeisen bank sector in Germany. So we have like a three-pillar banking sector. We've got public banks, private banks, and then we've got the cooperative banks. In the south area, like Munich, you will find a lot of cooperatives holding housing, large, how is it called, residential real estate, and providing their members with low rent apartment buildings. Then we have lots of cooperatives in the like supermarket area and so forth. So it's actually not that unusual, and it's a nice instrument to group people together and allow them to participate in the like economic or business venture that you're trying to set up. It's not as strict as the foundation with regard to the one man, one vote idea. So there are certain concentrations allowed within the cooperative. Yeah, those are basically the main four types of entities you could use in Germany for setting up a kind of decentralized structure. Any questions? All right. Maybe a couple of further thoughts. What is a token? I'm not sure if you covered that in the beginning of your speech. So the token as such, and that's just, to give a little comparison how different jurisdictions look at that topic. The token as such, not what it represents, but really as thing whatever, is subject to German law, not really captured. We've got the so-called other objects, but they are not really secured by the German law. There are no absolute right, which only apply to things that you can grab and to rights in the legal sense. You can more compare the token maybe to knowledge, which you can sell, for example, under German civil law. But somebody taking away knowledge from you would not really be punished under German law. And that's the same with the token. So what's really more important is what the token represents. And then basically the token will follow that right or whatever it represents.
Just maybe to clarify, we didn't cover the civil law aspect, so what we did were the regulatory approaches.
Mm-hmm.
That's
Yeah, clear. You've got loads of perspectives towards the crypto stuff, right? And financial regulatory is only a part. You've got the civil law aspects and the data protection aspects and IT aspects. Yeah, it's nearly impossible to cover that in one speech. And smart contracts. Also, some thoughts about this. You all know those are self-executing software, not really contracts, but certain self-executing handling of things. And there is an interesting thought that this actually, to some extent, might conflict with the monopoly of power that lies with the state. So, for example, if you rent out a car for a certain period, and that is still in the possession of the one having rented it, and he's not handing that back to you when the lease is over, you cannot simply go there and take it away from that person, right? If somebody is not handing something back that belongs to you and has no right to possess it anymore, you unfortunately need to go to court and get a title and then send like a state officer there to collect it, Gerichtsvollzieher. And that might conflict with some ideas that are out there in the blockchain space. This is less problematic when we're talking about rights and receivables because there is no right of possession there. But everything that concerns actually physical things, that could become a problem. The great idea of code is law obviously only works as far as there are not any specific form requirements involved. And plus, if you're transacting with consumers, code is law is not working currently at all. Why? Because the typical consumer will not understand your code, will not be able to read your code. And according to the law applicable to general terms and conditions, you must provide your counterparty with somebody that he can actually understand. And as long as coding is not taught in primary school, I guess we will not be there immediately. So we always recommend, following the dual concept, having your code plus a proper, prose written contract alongside of that. And it's actually not that much of a hassle. It's basically a tick box that everyone using the internet is used to deal with, general terms and conditions accepted. But without that, you will never really reach legal certainty for what you do in that space. Yeah, and then also, wait a minute, what did I do? The world outside is not black and white. It's gray, right? So the scope what you can actually code in a smart contract is quite limited because that's currently still reduced to black and white. But the most part of typical legal contracts deal with the gray areas, trying to foresee what might be happening in the future and also come up with some, theoretical arguments how to deal with situations you might not have foreseen. And that cannot be, currently at least, not be delivered by pure code. So that's always to keep in mind, it will always only be part of a legal contract that you can actually codify. Yeah, maybe some further words on the DAO, a project that I really, really liked, but it came a lot with a lot of implications. And we currently have one colleague, Markus Büch, who's really thinking about how a DAO could actually be properly implemented. So what happened? I guess you all know the DAO case, right? Anybody not knowing the DAO case? No. So if people join together to reach a mutual goal, what you typically do by that, when you're pursuing a goal together with other people, you create, whether you want it or not, you create a legal entity. And that is what I like to call the default entity, which is basically known in any jurisdiction. If you're not actively deciding to go for a specific type of entity, but just, gather with a group of people and do something together, you're ending up in this default entity, which is under German law, the civil law partnership, BGB-Gesellschaft. And what is also very much common in any jurisdiction I'm aware of, that default entity comes along with unlimited liability of everyone participating in that group for everything that's happening in that entity. So that's typically not what you intended when you participate here. So at least it's my personal opinion. What the DAO created was a civil law, at least a civil law entity of the token holders, because they all gathered to pursue a common goal. Yeah, and why is that the case? The laws of corporates actually started, I don't know, more than 100 years ago, when people decided to offer their services and simply said, you know, I think it was a contractor for something who simply put on their vehicles with limited liability. And then in the end, the courts say, well, that doesn't hold up, right? You cannot simply inform somebody that you're acting under limited liability. And out of that, the result was the creation of the GmbH, where we have now proper rules, how that is established. And one of the main features is that it must be like public knowledge to what extent you only are liable, you created a liability barrier between the entity you're acting within and yourself. So it must be public, like in Germany in the commercial register, that you actually run a GmbH or you run a limited partnership or you run a stock corporation, because then for everyone is clear, you know, you cannot directly rely upon the assets held by the shareholders, but you're limited to whatever is in that entity. And that's the reason why those unregistered entities typically come along with unlimited liability. So then I was thinking about, you know, cannot we argue it a little bit differently? Maybe going back to the franchise structures. In a franchise structure, you typically will also find entities that act together, like McDonald's, for example, or Starbucks. Or, but in those cases, it is actually accepted that they are not jointly liable for everything that happens within any of the single entities. And the reason by that is that there is one entity granting the license to act under the name McDonald's, for example, but it is a bilingual agreement between like the founder of the whole system and the single entities acting with the same brand. That's what we call the star entity or star contracts. So that's a way to get out of, you know, that civil law partnership. But I don't think that it is applicable to structures like the DAO, because there is, and that's the reason why the DAO was set up that way, there is no central entity with bilingual relationships. But the DAO is specifically set up as decentralized entity. So I don't think that applies. Yeah. So that's my current finding. Would you agree, or how would you see the DAO?
I probably would need to take some more time to think about that as well. Yeah. I think there are a couple of people who are saying that this is a GBR, right?
Mm-hmm. Yeah, that's a civil law partnership. Yeah, exactly. And then I also said back then, the problem is with such a structure, you're basically creating a fund, right? And that's your home turf as well. A fund. Yeah, because people pool their funds to invest according to like a mutually agreed investment scheme. So that's basically then a fund. What means that in Germany that the manager needs to have a license. So you could argue there wasn't any manager, right? Because the token holders could vote, what entity they would like to invest in. That actually never happened, but and that's also a great argument because the BaFin published shortly thereafter a letter to the Business Angel Association, which had fought for that letter for 2 years, saying if all decisions are taken on the shareholder level, then you're out of the fund regulation. And I thought this is what really saved those guys here. A mutual corporate?
A mutual cooperative.
Well, you can only form a cooperative by going to the notary and getting it filed in the register, right? So if you don't do that, you end up with that, unregistered civil law partnership. Yeah, because all other entities are basically opt-in models. You must take like a decision to build that company and to.
Had any experience with conflicts within DAOs?
Conflicts?
Yes.
What conflicts do you refer to?
I'm asking you as a legal expert, any conflicts which have occurred, which you have been faced with within DAOs or within the DAO, or DAOs acting in conflict with other things?
No, the only DAO I really took a closer look at was the DAO. And otherwise, if we are structuring decentralized ventures, that's obviously one important thing to consider. When you group your stakeholder groups, then obviously, there are conflicts of interest between certain groups, and that's what you need to balance. Yeah, absolutely.
It's not totally uncomplicated.
No, no. But, proper governance systems are never that easy. Yeah. But it's worthwhile to think about it because it's typically intended to be a long-term implementation. And I'm also a great fan of leaving some flexibility to actually adopt to how you see people behave in that system. We still need, a certain playground to experience.
This week we had an interesting speaker saying something in the direction that ideally the thought behind the whole thing is very idealistic and favorable. However, in reality, it is often there are three loudmouths, and those dominate. Then in the end, what is decided because the rest don't check their mails often enough, or don't look at the dialogue in detail, or understand the implications, and then in the end, the three loudmouths are the ones who decide the direction.
Yeah, absolutely. That's what I meant with thought leaders in social media, right? That's exactly what you're seeing. Exactly. That was what I was referring to. Yeah, and actually, yeah. And also, there's a lot of discussion about equity tokens, and people think that it's a great idea, to basically make everyone a shareholder into your venture. And I think, that's a terrible thought, because the DAO has clearly did clearly prove that you do not get people to vote and to actively participate. Most of the token holders, like in the real world, are passive investors. So they don't react when you call upon them. And it was really difficult in the end to actually read the already very low quorums. And what meaning has a quorum of 5% to get a vote, right? So then you can forget about having those people voting right away. And that's why we typically from a German law perspective, it's not really possible to create a true a direct equity investment in German entities currently due to the form requirements involved. But I wouldn't even recommend it if it would be possible. If you want to have them, participate financially, then simply make a profit participation without, maybe, you can say you grant some voting rights on, future developments or, broader topics. for which is not that important how many people really participate. But on important business decisions, I wouldn't recommend to grant voting rights. Yeah. All right. Yeah. Some overall recommendations for token sales. Obviously, take care when drafting your documents, and the white paper is of legal relevance, right? It's not something that wouldn't be taken into account when actually assessing the question what rights the token holders got. And also the terms and conditions for the token sales. It's very important that you figure out where you want to start with. Typically, what we see is that you take your home jurisdiction. That might not always be possible. For example, in Switzerland, interestingly enough, you cannot issue profit participations. I mean, you can issue them on a digital way, but since the legal transfer of the rights under a profit participation requires written form in Switzerland. So, a token which is tradable on an exchange doesn't make any sense, because the right will stick with the first buyer of the token from a legal perspective, while the token is moving around. So that's why we see a couple of cases where Swiss entities actually issued a profit participation under German law to deal, with that problem. And then plus the possibility to choose the jurisdiction or courts might even be restricted if you have consumers on board, right? So because the part of the consumer law you cannot circumvent by choosing like in lightweight consumer law jurisdictions. Those will nevertheless apply. So that's no certain limits. We see, especially for those cases where the blockchain application is not really built at the time of the token sale, that in addition to the terms and conditions for the sale, you will have at a later stage further terms and conditions for the use of tokens. And if that's the case, that's obviously something to be mentioned in the sale conditions, that there will be further conditions coming up. Yeah, do not copy and paste white papers in terms and conditions of existing projects. Really, especially the regulators don't like that. They have read a lot of those things, and it's not a good idea to come basically with something they have read maybe once or two or three times before already. That doesn't leave really a serious view. Yeah, open communication, there is really no reason to shy away from the regulators. Communicate open with them. Expect them to be in your Telegram channel or wherever you communicate via social media. So always keep in mind, they will read what you tell the public out there anyway. So better be honest and disclose openly what you plan to do. And if you get advice by us legal people not to do this and not to do that, then don't only write that into your inquiry for the regulator, but also behave like that, because, as I said, they are out there, they are following social media like other people as well. Yeah, check this legal situation wherever you market your token. KYC, you already mentioned. I think that's not such a big topic anymore. We basically don't see any ICO not doing KYC anymore. And that's not only due to the fact that you might yourself be caught by that anti-money laundering rules, but simply because you otherwise don't get a bank account. And there is no such thing as a venture that could only live upon crypto. You've got to pay taxes, you've got to pay wages, you've got to pay rent. So you will need some fiat. And for that purpose, you simply need a bank account. And hence, KYC is simply a must nowadays. But we can at least say that in the meantime, we also got German banks granting bank accounts to ICO issuers. That's really a good achievement. Pre-sale, yeah. I would say at least every second project starts with their main idea, and then we start drafting a token sale agreement and BaFin inquiry, and then at some point I get a ring and they say, well, Nina, we've got a couple of great investors. We would like to do the token sale tomorrow, a little pre-sale. And I always say, hey guys, there is no such thing as an exemption for pre-sales, right? Anything that applies, basically, anything that applies to the main sale also applies to the pre-sale. There might be exemptions, and we heard that from Sebastian, if you only address a certain number of people and you issue a security token, you might get an exemption for issuing a prospectus. Although I might say for the most I'm not sure if you said that earlier. I jumped in when you were like in the middle of your speech, but you mentioned that you don't need a prospectus if you're issuing a security only to a limited group of 150 people within one jurisdiction. I would say, at least for the typical instrument, the profit participation, I would put a little question mark if that's actually 150. It might also be 20. Because you've got, in the second instance, the Vermögensanlagegesetz. Yeah, so you mentioned that, yeah? Because, that 150 is something to be careful with, because that only applies, is only limited to certain instruments, right? Yeah. So the profit participation as the most popular one in that space could also come with a limit of 20, which is really little, and not 20 per jurisdiction, but 20 in total. Yeah, e-commerce rules, often overlooked. I wrote BaFin actually a really clear email that evening that they issued their warning last November, when they warned to participate in ICOs, and they said, well, if financial regulation does not apply, you might have no information rights, and the whole thing might be completely unregulated. That is nonsense, right? We've got e-commerce regulation, which is partly even stricter as the prospectus requirements. The only thing that does not apply is you don't need to go to a public authority and ask for permission prior to issuing it, right? But the results regarding your potential liability might be even worse than under the prospectus rules. So really watch out for that. E-commerce rules, if you involve consumers, they might come along with 2 weeks withdrawal right for the token buyers, and if you don't inform properly about this might even run forever. So yeah, watch out for that and try to comply with it, and build like the order process in the way that is required. So you must give certain information in a certain order. You cannot simply, put it all on one website, one click and buy. That doesn't work. Yeah, the last point I think had been stressed enough so far. So that was it from my side. Any further questions?
German banks now tend to also provide bank accounts to ICOs. Are there any names any banks that are particularly active in this?
Yeah, happy to mention one. I am allowed to name them by now. That's Volksbank Mittweida, for example.
Mittweida?
Yes.
Sachsen?
Yeah. And you know why? You know Mittweida?
No.
If you're in that space, you must know Mittweida. I'm a great fan of the Mittweida region. It's the home of Slocket, Christoph Jensch's company. And he really infected the whole city and the whole area. They've got now their university with one professor on concentrating on blockchain. Volksbank Mittweida is actually sponsoring that. They've got the whole, city administration on their side. They are applying currently for EU funds for what they call the blockchain. What is Schaufenster? Blockchain. Nobody knows what Schaufenster is. Shop? Yeah, window shop. Yeah, blockchain window shop. They want to create from the city of Mittweida. They really have a lot of plans there. It's a tiny town in the middle of nowhere, and out of Berlin, for me, it really is a hassle to get there because there's basically no train connection or anything else. But it's great, it's a great community down there, and I really love, seeing them being so active in that space. You will also, typically prior to Volksbank Mittweida jumping in, we always had to work with Bankhaus Frick in Liechtenstein. And they are quite sophisticated, I would say, by now, because they worked a lot with ICO companies. But as far as I know, they want a single-digit percentage of your ICO revenues for their services, which I feel, for a bank account, maybe a little bit too much. So we are very happy to have now German banks on board. And I also heard that Solaris is also stepping into that business now.
Solaris Bank was today in the news, they're getting into blockchain on GTEC.
Yeah. So Peter, I think, fought quite a bit to extend the services because Solaris is a white label bank. Typically, they don't really take, single customers and open a bank account for them, but their business is in fronting other businesses that require a banking license. So it's quite a step for them to now saying they are opening regular corporate bank accounts. But that's what I heard as well.
And any of the mainstream banks, the big private banks?
I heard that they are offering, especially in the private wealth sector, accounts on which those special customers can actually transfer their funds out of the crypto world in the fiat world. But we had no luck so far with requesting simple bank accounts for our ICO clients.
I wonder if private banking is the natural place for ICO teams to be in.
Yeah.
I'm not sure.
Yeah. Well, structuring the ICO, selling it would be like the typical service offering for an investment bank, right? So I always wondered why they didn't step in. But as far as I can tell, it's simply the compliant departments which simply say, don't touch it. And nobody gets a new service offering through in any of the large bank if you don't have the compliance department on board. Yeah. Mittweida. It's M-I-T-T-W-E-I-D-R-A. E-I-D-A. Yeah. Or Google Slockit. I get, maybe you will know Slockit out of the crypto space, or Christoph Jentsch.
So is that a public bank?
No, it's not a public bank. It's out of this cooperative sector. It's a Volksbank, so they belong to the Volks- and Raiffeisen sector. So it's not public. Yeah, it's a cooperative. It belongs to the private sector, but yeah, it's specific. Yeah, and I see them actually also. There is one other. It's like the Sparkassen sector. They are grouped. They have a very a high number of smaller bank institutes all across Germany. It's not like Commerzbank or Deutsche Bank, which is like one single bank covering whole Germany, but those are structured in a way that they typically are covering a smaller region. So one of the other cooperative banks is, I think, in the southwest. There's also one that is looking into the crypto stuff.
But they accept ICO bank accounts, that means they already comply with all the legal procedures.
Yeah, well, they require, you know, full banking level KYC for your ICO. And otherwise, you know, they simply you know, identify the ultimate beneficiary of the ICO entity itself.